Is a recovery underway? Peter Schiff says not so fast.
Unfortunately, the economy is not recovering at all. It's actually getting sicker. You have to understand the nature of the ailment, and that was government stimulus. Interest rates were too low for too long. As a result, we borrowed too much money, we spent too much money, we didn't save enough, we didn't produce enough, we didn't invest enough. And when the financial crisis hit, instead of allowing the market to cure the economy, we just shot it up with more of the stimulus that was making it sick. And unfortunately, I think we're about to overdose on government stimulus.
We asked for audience questions, and Nick from Tucson simply said, how long is this mess going to last?
Well, it's going to last for a while. The question is, are we ever going to clean it up? And I don't have the answer to that. I explore a lot of that in my new book, The Real Crash, which just came out, in which I really go into the solutions, what we need to do as a nation if we're ever going to have a legitimate economic recovery, instead of the phony stimulus-induced high, which is all we have now. But of course, when that stimulus wears off, it leaves one hell of a hangover.
So those who think the recovery is underway, you say they're being naive.
Well, they're wrong. I mean, these are the same people that said there was no crisis, the same people that said the economy was great back in 2007, just before we went over the edge of a cliff. They're the same people that say the economy is improving, but it's not. All we've done is borrow more money and spent it. We're more deeply indebted today than we were before the crisis. So fundamentally, I think we're in worse shape, and unfortunately, we're headed for an even bigger economic collapse than the one that we experienced in 2008.
And inflation is now underway?
Oh, it is, and it's going to get a lot worse. I mean, that's really the illusion that the government uses to try to pretend that the economy is improving, but it's not. All we're doing is measuring GDP with depreciated dollars. But you can see the cost of living going up, energy prices, food prices, wages are stagnant, or of course, in many cases, they're non-existent because lots of Americans have lost their jobs. In fact, you have record numbers of Americans who are now claiming disability because they can't find jobs. We've had a complete collapse in labor force participation, and more of the jobs are offshore. Our trade deficit is now running at 3 or 4 year highs. In fact, I heard just recently that in the last month, Americans borrowed more money in 1 month than in any month in 10 years. Why are they borrowing so much money? Because they have to go deeper into debt just to stay afloat. But ultimately, we're drowning in a sea of debt.
Thank you, Peter Schiff. You're watching the MoneyShow.com video network. Are we heading now toward a U.S. debt crisis? Peter Schiff thinks we are.
Well, absolutely. I think right now we're looking at debt problems in Europe. I think we are next. I think we have less ability to service our sovereign debt than Europe does with its. I think you certainly have pockets within the Eurozone where you have countries that share a lot of similarities with the United States. Right now, people are worried about Spain. I mean, we have a lot more in common with Spain than we do with Germany. And I think that once once their attention focuses back on the larger problems here in the United States, I think we are going to be in for not only a sovereign debt crisis, but a currency crisis.
So the U.S. debt crisis is worse, or will be worse, than the Eurozone debt crisis?
Well, absolutely. Yeah. And I think that in Europe, you still have the ability to deal with it. In America, we don't. And of course, when you look at our sovereign debt, people forget to include all the state debt, which adds trillions of more in debt on top of the same tax base. We don't look at off-budget items like $6 trillion or so in Fannie and Freddie debt. We don't look at over $1 trillion in guaranteed student loans. We don't look at 50 or 60 trillion in unfunded liabilities in Social Security and Medicare. So when you look at the totality of our debt on all levels, it dwarfs the problems that you have in Europe. And I think our GDP is less able to service the debt because of the nature of it. It's 72% consumption, and our debt is all short term. It's one gigantic adjustable rate mortgage with a teaser rate, and the teaser rate is zero. But the Fed can't keep rates at zero forever.
So how was this crisis first created, do you think?
Well, you have to go way back. I mean, I think probably the beginning of it maybe is in 1971 when we went off the gold standard, or maybe you can go back even further and blame it on the New Deal. But there are a lot of ways that we have chipped away at the freedoms that the founding fathers initially gave this country. But I think moving away from real money to fiat money, that is the real root of the evil. The reason that we were able to get so screwed up, the reason we were able to borrow so much money, the reason our economy was transformed from an investment and production and savings economy to this gigantic debt bubble of consumption and big government is because of paper money. And because the dollar became the world's reserve currency, we were able to keep this scheme going for a lot longer than any other nation historically was able to do. But just like every bubble, it is going to burst. We cannot continue this indefinitely. And I think all the signs are there that we are, nearing the end of this unfortunate experiment.
How can it be solved in a nutshell?
Well, you can't solve it. What you have to do is abandon it. We have to go back to sound money, where money has intrinsic value, where interest rates are determined by the free market, not by a central planning agency called the Fed. I mean, we determine interest rates in America the way the Soviet Union used to determine the price of bread. Well, it doesn't work. The government just can't pick a price out of thin air. You need market forces to discover a real price. And because interest rates have been too low, our government borrows too much and spends too much. Individual Americans don't save enough. Everybody is deep in debt. And we have this phony economy that is based on consumption rather than a legitimate economy that's based on production.
And this is no quick fix, is it?
No, unfortunately, these problems have built up over a long time. It's going to take some political will, because our politicians, all they care about is getting reelected. So they pursue policies that help get them reelected, but those are the policies that are destroying the economy. What's good economics is bad politics, which is why we need some statesmen in office who will actually work to solve the country's problems instead of just perpetuate their own political careers.
All right. Thank you, Peter Schiff. This is the MoneyShow.com video network. Inflation is here, and it may get worse, according to Peter Schiff.
Yes, of course, today inflation is known as quantitative easing. That is the new euphemism by which the government describes the process of creating inflation. But that's what happens. The Federal Reserve creates money out of thin air and uses it to buy U.S. Treasuries. And monetizing that debt debases the currency. And that is what is keeping this economy going right now, is inflation. And of course, the inflation causes prices to rise. That's why gasoline is so expensive. That's why food is so expensive. Of course, the government lies about inflation when it reports it in the CPI, because the CPI is deliberately designed to understate and mask the inflation that the Federal Reserve is creating. And now the government actually is trying to tell us that the CPI is overstating inflation, and they want to fix it again. They're trying to hide from us the inflation that they're creating. But eventually, people are going to be overwhelmed. The prices are going to be rising so rapidly that the government is not going to be able to lie anymore and pretend that there's no inflation.
Is this similar to the 1970s inflation, or is this much different?
I think it's going to be much worse. I think it's already probably similar. In fact, if we reported inflation today using the same CPI that they had in the 1970s, you would see that the rate of inflation is a lot closer to 10% than 2%. But I think it could get much worse than that. And the real risk is that it becomes hyperinflation, Weimar Republic style, Argentina or Zimbabwe style, if we don't stop the presses. But in order to do that, and if the Fed is going to let interest rates rise where they need to go to put an end to it, then we're going to have a real financial crisis, because then you're going to have all the banks that we bailed out, they're all going to fail again. And this time there's no bailout, and the government, the federal government, is going to have to default on its debts and restructure, just like Greece, because if interest rates go up, the U.S. government can't afford to make the interest payments on the debt, let alone retire the principal, if our creditors want their money back.
So, Peter, how can investors protect their wealth?
Well, get it out of the dollar. Don't own bonds. I mean, I don't know when the bubble bursts, but when it does, you don't want to be long bonds. And in fact, bonds are just future payments of dollars. So there's two reasons not to own bonds. One, they're in a bubble, and two, they're denominated in dollars. So you want to get out. If you want to be in bonds, look at Australia, look at New Zealand, look at Singapore, Hong Kong, Norway. I prefer real money. Look at gold and silver. I think some of the mining companies are ridiculously cheap right now that own a lot of gold and silver in the ground, and look at a lot of equities around the world that can be a good inflation hedge, particularly in a lot of the emerging market economies in Southeast Asia, the countries that have been doing all the heavy lifting, that have been doing all the savings, all the investment, all the production, the countries that are accumulating these vast surpluses. These are the countries that are doing it right. And you want to invest in those economies and in those companies, because they're going to be able to profit from the emergence of the global middle class. And I think the best thing that's going to happen to the global economy is a collapse of the U.S. economy, where the global economy just allows it to happen. What really puts pressure on the world is having to prop up the U.S. economy. But when they no longer make that mistake and allow the dollar to sink and they invest their resources in their own economies, right? If they invest productively instead of just wasting their surpluses in the U.S. Treasury market, I think you're going to see a boom in the global economy, and there is a lot of way for investors to profit from that if they get in front of it.
And your latest book, by the way, has an ominous title, real quickly, The Real Crash, America's Coming Bankruptcy.
Right, how to save yourself and your country. And in fact, America is already bankrupt. It's just that most people haven't figured it out yet. But by the time they do, it's too late to protect yourself.
Okay, thank you, Peter, I think.
Sure.
Thanks for your time. And you are watching the MoneyShow.com video network.